A very good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of Visual JForex, we will be working with the Parabolic SAR. SAR stands for Stop and Reverse. This is going to be third and the final session involving this indicator. And in this session, we will be completing the conditions which we need to be in place for the execution for the sell side of the trade using these optimization formation involving the SAR indicator. In last two sessions, I had demonstrated to you how we can get these blocks in place to get the instrument subscription done, where the Euro USD was used as the instrument of choice. Afterward, the position amount was defined at zero. These two indicator blocks of the SAR were added. And to look at the price volatility, we have these logical blocks along with the info blocks in place, and on the lower side we have these variables created to define certain requirements, and on the lower side we have these conditions defined for the execution of the buy trade followed by the trade command block of the buy limit order. Now I will give you a refresher of sort of what the logic is for the algorithm. Whenever we have formation where we see the break on the lower side, we will be looking to initiate the sale trade. But given the flaw, or you can say a shortcoming of the SAR formation, where if the underlying instrument is not really going anywhere, it is simply oscillating within a narrow range. In that kind of circumstances, we might see a lot of false signals being generated. To avoid that, we have added a simple condition, and that condition is that we need the last hour's closing value to be lower compared to the prior hour's SAR output, and the closing value for the last hour should also be lower compared to the closing value of the hourly candle which had closed 12 hours back. So here the time is 6 GMT, then we have to go back at 18 GMT and see the closing value of that particular hour. And here the candle is not really closing on the lower side compared to the hourly candle which had closed 12 hours back, so no execution will happen. So only when we have a break with a significant momentum which is enabling it to break above the last 12 hours low, only in that scenario we will look to initiate the trade. Also, the closing value needs to be lower compared to the opening price of the last hourly candle, and the opening price needs to be less compared to the last hour's SAR output. So, new SAR formation with the change in momentum should have taken place, and the break below the prior SAR output is also a requirement. And we won't be going for a market order, rather we are going to take into consideration the actual difference between the last hour's SAR output and the prior hour's SAR output. Whatever is the difference, we will take half of that and we will add it to the last hour's closing value, and that's the price point on which the new order will be placed, which will remain valid for 4 hours. So the formation is quite simple and equally easy to execute. So we head back to the Visual JForex platform, where we have to now define certain variables. For that, we are going to need a couple of calculation expression blocks. We have to take half of the difference between the SAR11 and SAR12. SAR11 is the last hour's SAR output, from which we will deduct the prior hour's SAR output, and whatever is the actual difference, we will take half of that. So for that, we need calculation expression here. I will add a couple of these. Even I am not sure how many of these we are going to need exactly. We will add as the need arises. All right. So we take this difference and divide it by 2, which is the variable df. Here you can see the df has a value of 2, start value of 2, a1 divided by a2 as per Excel convention, and it will become half of sell side difference, and whatever is the half of actual difference, we will add it to the last hour's closing value. So for that I have to take closing value of candle 16, candle close, this will be a1 plus a2, and this will be sale execution price. All right, stop loss and take profit, we will define it once we put in place the conditions for the execution of the trade. So one more calculation expression block, I will add it here. Order validity, we had defined it last time around, we will use the same variable this time around as well. All right, now coming to defining of the conditions for the execution of the trade. We are going to need 6 of these, as the formation for the sell side needs to be symmetrical with the buy side. So this is going to be more or less the mirror image of the buy side. And after that we need pending open order block, which will be a limit order, sell limit. Coming to the first condition, the closing value of the last hour needs to be less compared to the output value of the SAR for the penultimate hour. So we need candle 16 candle close to be less than SAR 12. First input less than second input. The candle 16 candle open needs to be less than the last hour's candle, SAR output. So here SAR 11 and candle 16 candle open will need to be compared. Again, first input less than second input. We also need to ensure that the momentum was bearish and it was sustained. So for that, the candle 16 candle close needs to have been less than candle 16 candle open. First input less than second input. First input less than second input here, and then we compare candle 16 candle close with closing value of the hourly candle which had closed 12 hours back, which is candle 17. So here we have to compare closing values of the candle 16 and candle 17. Oh, I have already added candle 16 candle close. Now I need candle 17 candle close. First input less than second input. Then, as and when price starts to drop below the last hour's closing value, we will look to initiate the trade. So again, we have to take candle 16 candle close as the common input for both of these if blocks. And we will compare this value with the 10-second candle closing values. We have these two 10-second candles, candle 18 and candle 19 with the look back period of 1 and 2 respectively. So I am going to take candle 18 candle close, which has the look back period of 1. It needs to have closed on the lower side, so first input less than second input, whereas candle 19, which was the penultimate 10-second candle, it should have closed on the higher side, so first input greater than second input. Now let me arrange these blocks on the lower side, so it will become much easier to understand the flow. All right. Now we have to define input parameters for this trade command block. We had defined the execution price, which was arrived after taking into consideration the actual difference between the two SAR outputs and the closing value of the last hourly candle. So this is the SEP. Trader instrument remains as it is. Default instrument of Euro USD. Trade amount I will change to 0.1 million. Slippage for Euro USD 2 pips is fine. Stop loss and take profit. We have to create two new variables for this. This I will name as SSL. The value of it will be derived from this calculation, and this will be named as STP. Now coming to defining of these variables. For that we take the prior calculation of HSD, which is the half of actual difference between the SAR outputs. We simply have to convert it into the pips in integer data type. So for that I will utilize this variable which we had created last time around. It simply converts the last of Euro USD's 4 decimal points in integer. So this will be A1 into A2, and the output value will be derived whatever is the output value, we will assign it to the stop loss. And the stop loss will be multiplied by 2. So this is again A1 into A2, and that is our target price. So we have utilized the stop loss and the target price in a dynamic manner depending on the actual difference between the SAR output values. Order validity of 4 hours, we had defined it last time around in the last session. So I will use that variable as it is. So with this, we have defined all the mandatory parameters which need to be defined for the trade command block. Now, to check whether the trade iteration flow is going till the very end, I will color code it and let's have a look. And as I see, it is fully functional, so that means the trade iteration flow is intact. There is no interruption anywhere in the formation. So that's it from my side for today's session. I hope you have been able to understand the logical as well as the execution part of this indicator involving the parabolic SAR indicator. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there. For carrying out the testing on the historical data, you will need the assistance of the JForex platform. All these useful links have been provided in the bio. Thank you all for joining in. See you next time around. Till then, goodbye.